Steve, what are you expecting, I guess, when it comes to the big banks? Who do you think could see the biggest upside from here? If a big question, as Leslie sort of posed to us, the valuations are at least considered stretched by some already.
Yeah, hi, Courtney. As far as the banks reporting tomorrow in particular, I think, yeah, looking for some pretty good results. You know, you go back to the April quarter, and things were in a much different position, right? We're in the throes of the tariffs, the Liberation Day conversations had stopped essentially with regard to advisory, IPO activity, and 3 months later we've had a terrific rebound, and I think the upward re-rating in the stocks has been justified, not only from the improved macro environment, or at least from the depths of those days in April. But much more constructive conversations. As Leslie mentioned, the deregulatory environment. We've got a decent loan growth here environment, about 3% for both commercial, industrial, and consumer. A bit muted given where interest rates have stayed elevated, but at the same time, higher for longer has resulted in some upward repricing on securities on the balance sheet for these banks. So deposit pressures, which were a problem when rates were peaking, that has abated, and so with a little bit of net interest margin improvement here, I think they can turn 3% loan growth into 5 or 6% net interest income growth. And still no concerns on the loan loss provision side either. Employment has been healthy throughout. That's an enormous determinant for delinquencies, charge-offs, and therefore loan loss provision. So looking good almost across the board.
And you mentioned sort of the impact of tariffs has somewhat been minimal after we had the announcement in April from the White House. We were all a little worried about what was going to play out. Of course, we've seen those deadlines move and many other things become fluid there. But you believe that businesses that are involved with banks looking for loan or capital expenditures have sort of taken their hands off the wheel when it comes to pause. And maybe they're deploying some capital now because at least we know a little bit more, perhaps?
Well, I think the shock factor on tariffs has abated quite a bit. We hear new announcements practically weekly, if not daily, and it's having much less of an impact. So I think companies are trying to find a way around tariffs to live in that tariff environment, whether that's on the cost side, the revenue side, moving production, and also there's this theme of tariffs coming on and then being pulled back before they actually go into effect. So I think, yes, the uncertainty remains, and that certainly could be resulting in some more moderate loan growth, some pause on expansion plans and the like. For banks, there's trade finance might be impacted negatively. Certainly has still had an impact on IPO and M&A activity, which I think would be much stronger in the absence of any tariff conversation. But certainly a bright spot there in terms of the potential for rebound in capital markets generally.